Good evening, everyone. Just wanted to thank you all for attending our latest, or the latest in our long list of investor events, which we stage free of charge to try and help people that are genuinely interested in the companies that we have and the elements, like, for instance, tonight it's a natural resources event, for you to come along, get more information about particular companies, and, as I said, particular areas you perhaps want to invest in or are already invested in. So free of charge, these events, so we very much rely on everyone visiting our website, which is lse.co.uk, which you probably know us as, and no doubt where you found the tickets. Got a fantastic lineup tonight. I will just give a nod to our next event in mid-July, which is an oil and gas event, so if you put that in your diaries as well, we'll have more information on that in the next few weeks. So we've arranged a fantastic panel tonight. I'm sure you'll enjoy it. This is also being webcast live, our first webcast, so that's a good thing for us to dive into as well. But as I said, looking forward to a fantastic event tonight. Great speakers, a great host, and I hope you learn a lot. So thanks again for attending.
Thank you very much, Scott, and a very good evening to everybody, both those of you in the hall and those listening to this, our first webcast, and also the first event of this season for LSE. And as Scott mentioned, we've got some more exciting events coming up. I'll mention a couple of them at the end. But as Scott says, we kick off with natural resources, an excellent topic. I think an asset class, you'll all agree, is really a building block of any portfolio. And of course, there's lots of interesting questions about holding gold, particularly when the world is again in a rather a parlous or unpredictable state. And then all those questions about whether you invest in the real commodity or the companies involved in it, and similar issues arising with all the other commodities, natural resources represented here, whether it's people involved in their mining, their production, their distribution, trading them. And we all know, of course, these resources the world needs for its global infrastructure. So we've got four top guests who are going to be talking about this this evening. Three from companies active in the field, exciting, new in some cases, or emerging fledgling companies. I know of the kind that our LSE investors are very interested in. And just a couple of housekeeping points. If you could, please, could you switch your phones off? We just want to save a bit of the bandwidth for our webcast. And we also get those annoying bleeps, which sometimes come up on the radio mics. So if you don't mind putting your phones off, that'd be great. We do want your questions and comments. If you're watching us at home on the web, it's very easy to send a question through or a comment, which we'll be bringing to our speakers here. Or indeed, if you are going to ask a question in the hall, then if you could just wait for the microphone to be brought round to you, because obviously, particularly with our webcast, it's important that we can hear the question as well. So, can you make a mint on gold? Well, I'm certainly not the person to ask about that, but we have the right person here to start our thinking. She's a CEO and a fund manager who's previously turned around a smaller gold asset company. She was once, I'm told, a gemologist as well, and she's led an impressive global search to get more women in the mining industry. But she's here now in her capacity as Chief Executive and Gold Fund Manager at South River Asset Management. So firstly, let us welcome Amanda van Dyke.
Hello, everyone, and thank you very much for having me. I'm going to try to go through this relatively quickly and then let you ask questions, because I think that's mostly what people want to do. I'm going to start with gold, and I need to, as an asset class in and of itself, and what drives the performance of the metal. The performance of the stocks is a completely different matter and is related to the performance of the metal itself. But nonetheless, you need to start with the metal before you can get to the stocks. So JP Morgan a long time ago said that money is gold and everything else is credit. That's been true for about 5,000 years. The reason for that is because paper currencies, or any currency that can be printed, whether you're printing general coins that aren't gold, can be produced in whatever quantity as is needed. During the recent financial crisis, we printed an unprecedented amount of money, most of it electronic. I read an interesting statistic recently. There's about $60 trillion equivalent dollars in global currencies circling around the world. Only 5 trillion of that is actually in paper form. The rest of it's electronic. And the majority of the quantitative easing money in the world has not been printed in paper currency, it's been painted in electronic currency. But that electronic currency has the exact same effect on global markets as the paper stuff does, frankly. And it's increased about threefold since the last financial crisis. So gold versus other commodities. All commodities in the world are demand and supply. How much you can get of it versus how much is wanted of it. The demand for gold goes up when people are worried about the value of their other assets. And there's lots of different asset classes in the world. The most common asset class most of us have is our bank balance, which is cash or electronic money in our bank. Then there's, the value of our stocks and shares, the value of our house, and then all the other stuff. But when you worry about the value of your stocks and shares and the value of your money because of inflation, or the value of your house for various reasons, that's when people tend to turn to gold. When inflation is devaluing all your other assets, that's when you run to gold. It is important to note with money and currency are different things. So money has two functions in the world. One function is a store of wealth, of value, and one function is as a transaction, is something you use for trading and transactions. Gold is a reserve currency, which means it's a store of wealth, and it's used as a currency of last resort for countries, for banks, and that sort of thing. But it's very rarely used as an actual currency for trading goods, and hasn't been used in a couple thousand years for that purpose. So that's one of the many reasons why gold is a slightly different currency than others. So as we said, the currency you can't print. That is all the gold that is in the world. The amount of gold that is in the world goes up by about 3,000 tons every year. There's about 166,000 tons in the world, and that's as much as we can get out of the ground. It's getting harder and harder to find more gold in the world because it's becoming lower grade and deeper and harder to find, generally speaking. So the amount of gold in the world is not likely to go up by more than 3,000 tons a year. And for the first time in history, gold is also being consumed. So gold is being destroyed, basically, the way we consume other commodities like copper and things we don't recycle. Every smartphone on everybody in this room, and probably all the tablets that you're watching this on, has a small amount of gold in it, and that gold is very, very small. It's a couple grams, but that gold is not being recycled for the first time in history. And so the 3,000 tons that is produced, about 5% of that is being consumed and not put back in for the first time in history. And it is actually expected that as the use of electronics goes up, we are probably going to consume more and more gold and not have it be put into the general world store of gold. Now, there are three things that significantly control gold prices in the world: in the long term, the medium term, and the short term. We're going to start with the long term. The long-term strongest correlation to the gold price is real rates of return. So real rates of return are, you can put your money in the bank and get usually the base rate as a return on your money. So I think in the UK that's about 0.5% right now. And then you can also, and then inflation is going up at about, I think the UK is 2.2% right now. Somebody might correct me on that. But that means that with 0.5% return, you're losing 1.7% every year. You keep your money in the bank versus spending it or investing it in something else that makes you more of a return. So when you've got negative real yields on cash versus inflation, gold goes up, always. Now, inflation was flat as a pancake during the financial crisis. Some people thought it was actually negative, but governments didn't admit to that. And then it started to rise recently, but rates have also started to rise. So real yields are inflation minus the rate of return you would get on an average bank balance. That's changing all over the world. Inflation rates are different, rates of return are different. But generally speaking, rates of return are negative right now because we've printed lots and lots of money, and the only way we can get that money back is, or governments can sort of make that money back, is by inflating it away. So generally speaking, there's a belief in the world that while we are raising interest rates, gold has continued to rise even slightly because inflation rates are going up at the same time. And in the long run, there is a very close correlation or negative correlation to negative rates of return and base rates. The second thing is the other asset class, the other store of wealth in the world. And this is actually negative for gold right now. Stock markets, investments in the world, they've all been going nuts. They've been having a great, great run. As anyone who has a FTSE 100 tracker fund will tell you, they've been, or an S&P 100, it's having a great time. When stock markets are doing well, gold is usually doing less well. So on one hand, there are negative real rates of return. And on the other hand, we have an incredibly rising stock market. And that has served as a damper on the gold price for the last 7 years, frankly. It's been rising steadily. Now, 90% of asset managers like myself who invest in general equities are petrified. We all think that the valuations in the stock market are at historical, unprecedented highs. And they are going to probably, cyclically speaking, they will correct. And when they correct, gold will do extremely well, like it did last time gold prices, the markets corrected. That being said, the last run of a bull market in equities is the most exponential and extreme run in equities. So reasonably speaking, gold is pretty flat. It's range bound between 1,300 and 1,350 US right now. And while general equities are doing well and having their last hurrah of this bull market run in general equities, the reality is that's a bit of a lid and a damper on the gold price, and will continue to be until those prices correct. Now, when people think that'll correct, some people think it'll happen in 6 months. Some billionaire in Egypt just put $5 billion in gold because he's petrified of markets correcting. And slowly, asset managers are putting bits and bits more money because they're scared of that happening. But the estimates globally are between 6 months and 2 years for when that general equity market correction is going to happen. And the truth is that until that correction happens, that cyclical correction happens, the gold price isn't probably, I don't think it'll go much lower because negative real rates of return are still in effect, but it's probably not going to do exceptionally well either. That is going to be the catalyst for the next serious run in gold. Gold is literally getting more rare and more expensive, and while quantity easing has come to an end, nobody knows how quantitative tightening is going to work. Some people think quantitative tightening is going to be what makes the markets correct. I'm not sure. But the nice thing about gold is that you can't print it. And it is getting harder to find. So there isn't any brand new technology like fracking that's going to get more gold out of the ground. There's a set amount on the planet. The easy pickings have been had. And the likelihood is that the steady amount of gold going into the market will decrease rather than increase. So we discussed gold as a store of wealth earlier. The store of wealth is generally as a reserve currency. So when countries want to prove that they are actually strong, they keep gold. They keep gold in their central bank, and it backs up the value of their actual currency. And the other thing that I hear a lot of the time is like, well, gold's an old-fashioned currency. Nobody cares about gold anymore. The reality is gold demand's gone up significantly over the last few years, and the reason for that is because the people that believe in gold are the people in Asia, and they buy more of it every day. So while more and more Western world people are buying less gold, more and more Asian people are buying more gold, because they are petrified about the value of currencies. And gold has been a currency for them, has been a store of wealth and a method of savings for them, and they don't have a benefit system that's going to protect them in the long term. So they always keep, so every year they would put 5 to 10% of their savings into gold. It's always happened, and it's continued to happen despite the growth in Asia, despite the growth in China. And China has become or Shanghai has become the largest global market from gold, replacing COMEX, which used to be the major trading center for gold in the world. As we were saying earlier, China has recently announced some of their gold, 1/3 of the amount of gold they have in their reserves, and they've also denominated a RMB gold option for the first time in history. And I believe we're going to discuss this a little bit later. But as I said earlier, gold is a reserve currency largely. It is not a currency for transactions. It's very hard to go out and buy anything in gold. It's a bank currency. It's a currency that serves like collateral for all your loans and that sort of thing. That is slightly changing recently. It started trading very recently, and it's not trading a lot. But in order to diversify away from what's called the petrodollar, the fact that all international oil contracts are denominated in US dollars, they have denominated an RMB gold contract, but the RMB isn't traded outside of China. So they said you can pay us in RMB, which nobody has, or you can pay us in gold. So there's a lot of people that are using gold for that purpose. So the question is, why would you own gold stocks and not gold itself? Gold will likely do a lot better as soon as the stock market's correct. It's probably range bound, as I said before, for the next little while. But the reason you want to be in gold itself, or in gold stocks rather than gold, is because on the whole, historically, gold stocks outperform gold 3-to-1. And the reason for that's reasonably simple. So let's say I'm your average gold miner, and gold is $1,300, and I produce gold at $1,000 an ounce. If gold goes up less than 10% to $1,400, I'm now making 25% more money. So the gold price has gone up 8%, but I'm making 25% more money. That's why gold companies do better when the gold price goes up than gold itself. So the question is, where is gold in this bull market cycle? Bull markets in gold, which this one started in January 2016. It's gone through a bit of a lull because the US dollar has done extremely well and the stock market's had a renewed surge. Is about halfway through, less than halfway through. Gold bull markets tend to last anywhere between 3 and 10 years. And these are gold bull markets in the past. We're about halfway through those graphs. And the idea is that in the next year or two, when stock market's correct, gold will probably take off, and it'll probably do extremely well.
We can move to the questions. We haven't
Sorry.
too much longer, sorry.
So that's about where we are in this market. And just so it makes, in case it makes any difference to you, I run a gold fund and spend all of my time buying gold shares and watching the gold price, so that's where I come from. Does anybody have any questions?
Yes, I've got one in the front. Just wait for the microphone. Actually, while we're doing that, let me just ask you a quick one. Obviously, we've got companies represented here we're going to be hearing from. You talked about why invest in a company rather than the physical product. In the end, though, you're just backing the management and the effectiveness of the company. It's difficult for people to get their head round why it matters they're producing gold rather than anything else. So can you just explain quickly, I mean, the kind of stocks you might have added, for example, to your own portfolio? What do you look for in the company?
Get a bit more level on his mic.
Management is extremely important. There's an old adage by Mark Twain that the definition of a gold mine is a hole in the ground with a liar on top. It's very hard to find trustworthy management teams that are effective in the gold business. So there's some practical stuff, like can you get the gold out of the ground for less than you can sell it for? So can you make a profit? That's the most important question I ever ask. Like, can you make a profit, and how much profit are you going to make per ounce of gold? That is the most important question. And then I rate the management and their honesty to some extent. Their track record is quite important, but their ability to deliver, because just because you have a beautiful business plan doesn't mean you can actually execute it. And so it's a combination of the quality of the asset, your ability to get it out of the ground at a profit, and the ability of the management team to deliver.
And can you tell all that or some of that just from reading reports, or is that really something you have to do with sort of direct visiting of companies and that?
I won't buy any company where I haven't met management, usually more than once. Okay. It's just too important a factor in a company's ability to perform.
Okay. A question at the front here.
Is investing in a gold ETF a safe investment?
Yes. Well, a gold ETF is a proxy to the bullion price, paying a small fee for their management of that. But generally speaking, ETFs are a very good way to invest in gold bullion.
Asset managers don't like them very much, do they? They're
I
sort of
actually
cutting you out of the equation in many cases.
Well, there's two kinds of ETFs, right? There's ETFs that buy gold itself. So it's a lot easier for the average investor who wants direct. He doesn't want to take the risk of investing in gold companies because that's riskier innately. And he wants to invest in gold bullion, he'll invest in an ETF. And if you want to invest in senior gold producers, an ETF is pretty good as well. I mean, asset managers don't love them, but at the end of the day, they're a very reasonable way to get exposure to gold.
But wouldn't that also depend on the solvency of the ETF provider?
If an ETF is traded on a global exchange, a reasonable global exchange, it gets arbed in baskets. So you can create or redeem units, and a prime broker does that for you. So it doesn't matter how if it gets really small, if it's a very small ETF, you might not want to touch it. But frankly, mostly they're quite. If it's an accredited ETF traded on a major global exchange, you're probably safe.
Okay.
Amanda, I've got a question from one of our people who has been looking at this at home, and this is from John Griffiths. He's asking about something which you touched on earlier. This is all this talk there's been about the ability of people to sell oil to China direct and to do that in RMB instead of in dollars, and the fact that you could then buy gold with it. You've already touched on this. John clearly thinks this has been a bit of a damp squib, but what we were told was this was going to change everything.
Okay, the gold denominated yuan oil contract is important, but it's important insofar as it's just one more thing where gold is underlying and supporting the value of another asset class. It's another form of reserve. In order for it to truly make the gold price go up, this is a brand new product. It only started trading earlier this year. You need huge amounts of transactions in gold to happen. And there's very few transactions that have been denominated with this new options contract yet. Like millions, not billions. And until billions are being traded in it, which may or may not happen, and we don't know, it's not going to seriously affect the gold price. It's a question of time. But options contracts take time to be important. And what is important is that a major a major country in the world, one of the most important countries from a trade perspective in the world, is willing to take gold as a form of currency or to pay gold as a form of currency. And that underlies gold's value in a new economy that is frankly moving away from the US dollar and moving away from a paper currency system. They want something more substantial to back it up. And what's also interesting is all of the countries that are selling oil may or may not eventually prefer to get US dollars or gold instead. It's very interesting. Turkey and Russia are two of the countries that have been significantly increasing their gold. China, Russia, and Turkey are the three countries that have most significantly increased their gold reserves, as in increased them by about 10% per year, which is actually quite difficult because they have quite large reserves. And they're continuing to do so. And what that means is that major institutions, major countries, are worried about the global financial system, and they want something more secure in the background.
Any other questions in the room here before we let Amanda go? I think she'll be staying with us, so if you want to grab her afterwards during the refreshments, that'll be great. Okay, well, thank you very much indeed, Amanda, from the investment company there, from South River Asset Management. Okay, well, let's move on now to the first of our feature companies here. And this one is focusing on projects which, some of which are in Turkey, in this area which is excitingly termed the Hot Gold Corridor. I'm sure some of you may be familiar with that. They claim to have a very strong joint venture business model. And the MD who's with us today graduated from the University of Southampton with a first-class BSc in geology in 1997, so he's a real geologist, and from the Royal Society School of Mines, Imperial College. So let us welcome Dr. Kerim Sener from Ariana Resources.
Well, thank you very much for that introduction, and thank you to you all for being here tonight. Firstly, just following on from Amanda's introduction to the subject of gold, I suppose I'm here to prove Mark Twain's adage wrong, first and foremost. There's also a few other points that I'll touch on during the course of the presentation that relate to Turkey, because that was also brought up as a subject matter related to gold. So we are a Turkish-focused gold exploration and development company. We've been operating in Turkey since early 2004 and as a listed company since midway through 2005. We started off in grassroots gold exploration, effectively, primarily in Western Turkey, but we had a whole range of exploration projects right across the country. We've since focused our exploration and development efforts into a very particular area in Western Turkey, which we now refer to as the Red Rabbit Gold Project, which we're developing in joint venture partnership with a Turkish construction firm, Prosia. The Red Rabbit Gold Project comprises two halves, the Kızıltepe gold-silver mine, which has been in production since March of last year, and some of the figures related to that initial production during the course of last year are shown on the screen. It's a highly profitable operation. The second part of the Red Rabbit project is the Tavşan development opportunity, and I'll talk about that in further detail later into the presentation. Most importantly, once we'd made the decision to move into development at Kızıltepe, it took us about 6 years to go from late-stage resource development through the process of financing and developing the mine and into construction. So we have an exceptional track record in Turkey through the discovery phase right the way through to the delivery of an operating gold and silver mine. And importantly, as you can see, the cash costs are actually representative of the lowest 30% of production costs globally. Now, our growth plan at Red Rabbit involves taking the existing expected production base level of 20,000 ounces of gold and increasing that to 50,000 ounces over the course of the next few years. And that will require the development of the Tavşan site. In addition to that, in late 2016, we took the 51% stake that Eldorado Gold had in a joint venture in northeastern Turkey at the Sullenbaş project in exchange for a 2% net smelter return. So we've now got 100% of that project. It's the largest project in our portfolio with 1 million ounces in inferred and indicated resources, and we're applying ourselves very specifically to that as well. In terms of an investment, we're an investment that has no debt, certainly at group level. The debt is housed and in fact ring-fenced at the joint venture company level. We took a $33 million development loan from a Turkish bank, Türkiye Finans, in order to build the mine. And we're paying that off successfully every month. We've also demonstrated significant potential for further resource growth right across the Kızıltepe site, but also at Tavşan. Recently we completed a new resource statement at Tavşan. And also it's important to point out that we have robust stakeholders right the way through from the local level there in around Kızıltepe, right the way through to government and indeed, of course, our supportive shareholders. Turkey as a jurisdiction, it's a very stable jurisdiction from the perspective of mining. There are a lot of incentive schemes that the government have brought into play that we've been able to take advantage of, and I'll touch on those later. I won't dwell on this slide. Suffice to say that I'm joined here tonight by our chairman, Michael de Villiers, in the back there, so please ask us questions either during the Q&A or later. Moving straight on to the peer group comparison. Just a few of the peer group. All of these companies are in similar jurisdictions. Some of them are similar size, some not. But an important one to point out, just purely because of share price performance, is actually sentiment. You'll notice both share prices tick off at around early 2016, and this largely relates to improving confidence in the gold sector generally. But it's very interesting how we've tended to track sentiment better than perhaps any other company out there. So Turkey, Europe's largest gold producer. And actually at this point I'll just touch on something Amanda mentioned, the history of gold. Turkey is actually the birthplace of gold as currency. It's all started off here in Western Turkey in a place called Lydia, the Kingdom of Lydia, under the reign of King Croesus back in 560 BC. I think the very first gold staters were minted. And importantly, and this again touches on another point, those gold staters, in terms of gold value today, will still buy you what you could have bought back in Lydian times. There's no erosion of value, even over the course of thousands of years. Now, all of Western Turkey, you see evidence of some of this historic mining that goes back thousands of years. So just quickly, our main focus area here is two. That's the Red Rabbit project area. And area one is our Salınbaş development project. And I'll talk about Salınbaş first because it is the most significant individual resource within the portfolio. It's 1 million ounces in inferred and indicated resources. It's located just to the north of the major hot mining discovery that was made by the Lydia Mariana joint venture in 2015. And of course, the 30% stake that Mariana held within that joint venture was bought by Sandstorm Gold, the royalty company, for $175 million. So it's a province that has quite a lot of pedigree. There are a number of other major mineral deposits in this area, copper gold dominant. We've got this whole area under license, but our main focus is here at Ardala, the copper gold porphyry, and at Salınbaş, an epithermal system. We completed a scoping study on this in 2015, just based purely on the Salınbaş resources, just to demonstrate that the project has an economic core. We are actually planning to increase the level and improve the level of understanding of this system, and that's work that's currently underway. I also have Zach Van Coller in the audience. Stick up your hand. So Zach's our geologist. Later, if anyone's interested, we can show you a three-dimensional model of the Salınbaş system and how it relates to the Ardala copper gold porphyry and our thinking around that. Most importantly, the area is relatively underexplored. And the work that we've been undertaking recently since we took it out of the joint venture of Eldorado Gold has been to improve our understanding and to demonstrate that this project has the potential to become multi-million ounce. And we certainly believe that to be the case. We've discovered a whole bunch of other target areas right through the hot gold corridor, as we refer to it. So these red dots here represent some of the targets that we've identified. Most of these obviously are clustered around the Ardler copper gold porphyry, which is shown here on this inset map, this pink blob. And on one flank of that, we have the Ardler gold-silver system developed. Most significantly, the Sullenbush system is developed along a particular geological contact. It's this dotted line here, and we believe that is potentially consistently mineralized, yet undrill tested to the north. So we've got about 850 meters to the north that remains to be drill tested. So that's our major exploration project at this time. But moving on to the engine of our growth, the Red Rabbit joint venture, and our production at Kızıltepe. So these are some of the statistics as at the end of last year relating to revenue from the operation. That figure is now up as of the last quarter to just over $21 million in joint venture revenue. And that figure has also changed to just above 15,000 ounces produced. We are targeting 20,000 ounces of gold production during the course of this year.
Do you get gold and silver in the same mine?
It's gold and silver, yeah, and that's found as electrum, which is the natural amalgam, effectively, of both elements, but as well as silver sulfides. And actually, that results in what we call the gold effective price. And what that is it's accounting for the contribution of silver to gold. So it's the effective price of gold as a result of that silver bonus. The cash costs, as you can see, in the last 2 quarters of last year, since we entered commercial production in July of last year, are very much lower end of the spectrum. And in this last quarter that we reported on just last week, it's 612, and well within the range of our expectations, which are about $600 an ounce over life of mine. And this shows some of the results of what was the definitive feasibility study, but of course we've increased the processing capacity now to 180,000 tonnes. This is the site taken by one of Zach's flying beasts. This is the processing plant over here, CIL processing, carbon in leach. It's also got a carbon in column section. So we take it through conventional crush and then ball mill grind into the CIL tanks there. The open pit that we're currently mining here is at Arzu South, but just over the hill on the other side we have the Arzu North Derya system, which we'll be expecting to start mining next year. Lots of local infrastructure, the nearby town of Sundırga over there, a village over here. We source all our staff locally. We've got about 175 people on site. Almost all of them are local, and I mean really local to here, as well as our engineers, and they're drawn from all over Turkey, but all are based on site. So it's an entirely Turkish-run operation. We have secured strategic investment status through the Turkish Ministry of Economy. This has dropped the corporate tax level from 20% to 2% through the payback period. The Turkish government also contributes 100% to the social insurance contributions of all mine employees for 7 years of mine life. We also get benefit of interest rate support, so we're actually paid by the government to be able to support the interest payments we're making to the bank effectively. And then there's other customs duty exemptions, VAT exemptions or rebates. In terms of the construction capital loan, by the end of June, we'd have repaid about a third of that. So we're successfully paying down that debt very quickly. Quickly moving on now, because I know we don't have too much time, that's the exploration and resource upside that we see at the vein system at Kızıltepe. We're certainly going to grow the length of the mine. Those are all the target areas. These are the veins. This is the area we're currently mining, but these are all the veins that we could potentially mine in the future. As you can see, there's a huge amount of upside. Moving on quickly to Tavşan. This is located about 70 kilometers to the northeast of Kızıltepe. This is the project that we plan to bring into production over the course of the next few years, producing at a rate of about 30,000 ounces. We've recently completed a new resource estimate. Those are the revised figures, giving us 4 years of mine life based on the designed pits. And I can show you that now. Those are the design pits down there. Sorry for the size of the diagram. But these are the areas that we're mining, basically these areas in red. It's a flat-lying epithermal system that sits on the top of the hill, so you're basically going straight onto the ore body. The strip ratio is almost nothing here. So from a mining perspective, it's relatively, and in fact, about the lowest risk mining you could imagine. Lots of targets still to be chased up. So these are some examples of drilling. This is all from surface, so there's certainly scope to grow the resource. So what are we planning to do in the year ahead and the remainder of this year into next year? Obviously, operational improvements at Kızıltepe, they're ongoing. Every quarter we've been able to demonstrate yet another improvement to the operation. What I can say is that we have exceeded feasibility expectations all the way through since the inception of the operation. We continue to improve on that. We're also looking at future underground mining possibilities as well, in addition to the permitting of further pits in and around Kızıltepe, so that on some of those other veins that I showed you. We're fully expecting to take the mine life well beyond the 8 years of the feasibility study. And at Tavşan, well, we've just completed the resource estimate. That's again de-risked the resource, taken the resource to measured indicated categories primarily. We don't need to do much more drilling there, if at all. We're moving straight into the feasibility study now, further metallurgical test work, as well as an environmental impact assessment. And that then moves us into permitting. And then, all being well, we have another discussion with the lender, Türkiye Finans, secure another loan, and then develop that as our second parallel operation. And I'll leave you with a summary side and invite questions. Thank you.
Thank you. Yes, so questions for Ariana Resources. One at the front here. Microphone. So we can run fast.
Obviously, gold being quite a valuable commodity and a small size. Do you ever suffer it walking out in people's pockets? And if so, is there something you can do about it?
Yeah, that's always a risk in any gold operation, admittedly. And in our case, because of the particular processing technique we're using, carbon in leach, there's cyanide involved, and you don't want to get too close to too much cyanide. The other thing is the gold is free and fine to a large degree, so you actually can't see it in the ore. Only once in 13 years of operation have I actually seen a speck of visible gold. Generally, it's so fine you can't see it. So you can't have people panning the stuff effectively. There's no point in the process where anyone would see physical gold other than once it goes through at the back end of the elution process, just before it goes into the furnace. Okay. And even then, when it comes out, it's actually a doré, which is 10 parts silver to 1 part gold. So it looks more like a silver bar than a gold bar.
And I assume at that stage it's quite a big lump as well.
Yeah, exactly. It's about that sort of size, each individual doré bar. And then that's taken under secure delivery to Izmir Airport, and from there flown to Istanbul, straight to the refinery.
Can I just bring in Amanda from South River Asset Management? I mean, you were talking earlier about management of gold companies, trustworthiness and all that. Obviously, you may not have had time to study this company in detail, but any general thoughts about operations like this?
Well, we're a little biased given that we're invested in Ariana. I know the management well, and they're one of the teams that I trust. Turkey is a much better jurisdiction than people give it credit for. One of the problems with Turkey, though, is a problem Ariana itself doesn't have, because Kerim is Turkish, or half Turkish, and he knows how to operate. It's one of those jurisdictions where foreigners have had difficulties operating in the past. Kerim doesn't have those problems. And also, if you remember the graph that I had earlier that said that the grades of gold are going down further and further. Stealing gold used to be a big issue and still is a big issue in places like South Africa, where you can see gold veins. But the grade of gold has gone down so significantly globally that it's 1 gram per ton. So think a ton of rock, which is approximately, generally speaking, a meter a square meter of rock, generally speaking, and you've got 1 gram in it. It's very hard to steal that gram of gold. To find it, let alone steal it, is a big deal. And the security on the other end, when they're pouring doré bars, is usually very, very high on these sites. So
And you've been down a lot of mines and tried, presumably.
well, it's quite interesting when you go to South African gold mines, when you come out the other side, you get, they don't like girls down, but you get searched. And the miners get searched on coming out on the other end.
Are you seen as a Turkish company? Because I was quite surprised when you were talking in sort of fairly sort of jolly terms about your relationship with the government, because I suppose from here our view would be of an increasingly authoritarian government, and it wouldn't surprise any of us if they grabbed foreign-owned companies.
They would never do that. In fact, just this last weekend, we had the British-Turkish Tatlıdil Forum, which various government ministers were in attendance, and Ariana was a sponsor of that. And that particular point was made. And the ministers know how valuable foreign investment is. That's why they're here in Britain, to try and attract further British investment in Turkey.
Is it because of Brexit we're all becoming outsiders
Partly.
together?
So actually there were 3 sessions on Brexit and post-Brexit Turkish-British trade relationships. So it's a very important aspect.
Okay.
If it helps, I can comment on that briefly. The issue with investment in Turkey there's been no history of Turkey ever nationalizing assets in the mining space or even the oil and gas space. The issue for Turkish companies I'm not pretending there hasn't been issues. Not all, some companies have issues because they can't work within the Turkish system. Many companies figure out how to do it. Ariana is one of them. And it's, as I said before, it's about management track records, the ability of management to execute the mine plan.
Just want any comments from the floor about investing in companies like this and what you look for as investors?
Well,
We've got a question at the back.
No, it's not a question. It's a statement to help support Kerim's point about no nationalisation. The 2 largest gold mines are owned by Eldorado.
That's
Do you want to comment on that?
Yeah. So the largest single gold mine operating in Europe is owned 100% by Eldorado Gold in Turkey. It's been a very successful operation. Just a couple of years ago, they brought their 2nd mine on stream, FM Çukuru, not far from Izmir. So Eldorado's been going very well on their own, unaffected. And, I think Amanda's point is more related to the bureaucracy. How do you deal with the bureaucracy? And I think that's where we do have an advantage, because they do perceive us as, they know we're a foreign company primarily, foreign investment, but they see our face is a Turkish face. And I think that provides a bit of comfort.
Okay, well, for now, Dr. Kerim Sener, thank you very much indeed from Ariana Resources. Well, now we're going to enter the world of magnetite, rare earths and tungsten. Managing Director John Peters, who's going to speak to us next, is a CEO with over 30 years corporate finance experience at senior levels. I was talking to him beforehand, and interesting to see that in contrast to some of our other speakers, his experience goes outside the sort of mineral world to other things too, and he's bringing all that experience to another AIM company. So John Peters, who's MD of Strategic Minerals.
Thank you, Nigel. I should start off with the good news and the bad news. The good news is we're not looking to raise any capital. The bad news is you've got to listen to this Australian accent, and I've made a very big promise that I will not use any sandpaper in the delivery of this presentation. I hope some of you get that one. Strategic Minerals is probably a bit different to some of the ones you're going to see here as well. We're probably different from a lot of companies in that we're profitable and we're diversified. So we're not one mineral that we're exposed to. When you talk about the gold miners, there's one gold price. If you talk about other commodities, there's one. In our particular case, we've looked to try to get a suite of them to try and work our way through cycles in various prices. So the usual disclaimer. The main sort of stuff that we're about is we like to think that we tick all the boxes here. Firstly, unlike most companies, we're in a top decile of the miners in that we're a uniquely profitable company. We have significant upside because of our diversified portfolio, and that portfolio ranges not just from cash generation, but through exploration, etc., in various levels from brownfields to greenfields. The cash flow we have got, we couple by trying to keep our overheads low. As many people will know, particularly when it was even more tighter, the long flight from Australia was done economy class. Nowhere else could I stretch my legs. But we're very mindful of that even still. We have a history of that. We keep it that way. Recently, we put on a new project, which will be talked about in this as well, and that project anticipates a second revenue stream into the company. When we do that, that starts to change the profile of the company, and it's quite a game changer for us, because what it does, it gives you two cash flows coming in, gives you certainty of cash flow, even raises the possibility of dividends at our level. And finally, of course, the other big tick you've got here is the fact that we have an extremely experienced, committed, proven management team. We've turned this company around from where it was. We're pointed it in a very strong direction, and we're all committed to growth in these sort of areas. So all in all, as I said, we tick all the boxes. If that doesn't tick all your boxes, I've got to become a superhero to do it, I think. So that's that. So basically, we're in 4 areas at the moment. Starting from the top left there, the Southern Minerals Group is probably the core of what we have. It's a magnetite stockpile. I'll be going over each of these a little bit more in a few minutes. A magnetite stockpile in New Mexico, so in the US. And that one's more of a logistics exercise than it is an actual mining, because it's an existing treated magnetite stockpile, and we help distribute that locally, etc. Then we have our most recent acquisition on the top right, Lee Creek Copper Mine. This one is particularly interesting because we believe this will be in operation or producing cash flow by the middle of next year. So it's and quite substantial cash flow as well. So again, it's developing for us that second cash flow that will underpin the whole company. Then, as my friend and co-director Peter Whale here often refers to it, we're poledarking in Redmoor in Cornwall, looking for tin, tungsten, copper. Have been drilling there. It's a brownfield site. We're getting some good results. We've got great people, great community support. Everyone down there thinks is somehow or another related to a major miner, as they keep telling us. But, you know, it's a very interesting project. Again, one not necessarily going to come off in the shorter term, but again, people will hate this, but I call it the juggernaut. I reckon once it gets going, it's just going to be very hard to stop. Finally, we've got the very greenfields areas in a company we have in West Australia called Care. That's got 2 major sites. One of them is prospective for nickel, particularly nickel sulfides, and we've also discovered some cobalt deposits there as well. And the second is a place called Mount Weld, and that is prospective. It's right up, it actually abuts the Mount Weld rare earth mine, and is also prospective. Besides for rare earths, it's right in the middle of a gold area, so that keeps Amanda happy. So here we've got quite a diversified group of projects. How we look to manage this, to a large extent, we try not to go to our shareholders or the market itself unless there is a accretive asset being added, right? So generally we try to fund within ourselves if we can. We're in that position now where we're actually got a bit of luxury that we can do this, you know? It's a nice thing to have for a change. So Cobra has been generating us some cash. You can see we feed it into some of the others, but pretty soon Lee Creek is going to help us do the rest as well. And Lee Creek also has some expansion and availability as well. So, and you might say, well, look, you know, you've got all these. Why you got all these sort of products, etc. And it's not by accident. The management, the board, we've actually sat down and said, look, what are the metals and minerals we want to be in that we think have the best demand and supply aspects? What are the ones where the prices are going to do the best? You know, and we've picked out some of them, and as you can see, most of them are there. The strange thing to us is we didn't start this way, although it's starting to develop a bit more, but almost all of the extra ones have an orientation towards some of this new batteries that are coming out. And yes, we see the trend occurring with that as well, and we know some of that's going to come. It's not that we picked these for that reason, but we picked them because the demand and supply was there. This additional incremental demand is very important, and it will drive prices in those sort of areas. So what we've got is we've got operating cash out of the magnetite in New Mexico. We'll pretty soon have it coming out of copper. We put that into our tin, tungsten, copper explorations, and we also put it looking for the others. Now, of course, this down here generates most of our money, but at the same time, this stuff up here is what can just send your share price through the roof. So, Cobre. As you can see, this looks like a bit of a dam area, and in fact what it is, they fenced off the end of the valley, filled it with treated magnetite, and we have a contract with the mine owner to remove that. It's actually, as I said, it's the core of what we've been doing as far as cash flow is concerned. We've now got about 750,000 tonnes of material left. Told you it was very low risk. Profit margins have been very high for us. They've been in the order of 50 to 60% throughout 2017. And as I said, it's our cash cow. You might notice we've got a drop here in the last quarter. One of our major clients has asked for a bit of a slowdown because of a backup with herb production, and so we're doing that as well. But essentially, we're in a bit of a luxury position to have that sort of cash flow backing us up. That takes us to our next close production item, Lee Creek Copper Mine. We picked this up, I think, for an absolute steal. Well, what we effectively picked up was 24,900 tonnes of JORC-compliant copper resource in the ground at less than $100 a tonne. Now, given that the copper price is approximately $7,000 a tonne, I think we've got some room there that we can soak up some costs. But the main thing is there are existing licences. Very importantly, people don't seem to be concentrating on the fact we have an offtake agreement for almost anything we want to produce. We've got an offtake agreement that will take 300 tonnes a month from us. We know why it suits them to do this. There's a very strong economic reason for that. We're probably going to start around 200 tonnes sometime in the middle of next year and start to work our way up. But even at 200 tonnes, that's at the sort of prices, the price is based off a percentage, 85% of LME copper price. We're talking about $1.2 million a month, US dollars, sorry, a month in sales. Start to work that into what that means for profits, and you can understand why this has my great concentration. We will be making sure this comes out properly over the next year. Now, these things, it's a reactivation of an existing copper heap leach mine. We're probably going to add some agglomeration to it to make sure that it reduces the risks of problems associated with heap leaching. But we believe, and we've got very strong belief, that we've got a team together. We've looked at some of the problems that actually caused problems at this mine many years ago when it stopped working. And we know that we can carry that through. So we're very confident on producing this. Now, I say we're going to have cash flow about the middle of next year. We'll actually might have some cash flow before, but we're going to have regular cash flow by that stage. So as we start repairing and going through some of the old heaps, we may generate a little bit of money that helps with the rest of this. But in the end, it's sort of next year. And of course, that will be a complete, as I said, it'll be a complete game changer for us. Pole darking, down in Redmoor, down in Cornwall. It's got tin tungsten on there. There is also a reasonable amount of copper associated with this. So when I talk about this one, you'll hear us talk about a tin equivalent, and that looks at the values of all of these in what's being mined. We own 50% of this project with an Australian listed company called New Age Exploration, who strangely has all its assets in the UK. It's got quite a large area. It's an established area. Our drilling has virtually doubled what we had initially as our resources, showing about a 1% tin equivalent grade. we've been doing some analysis of it. We know we've got to drill a bit more to get it up to a level where we've got a sufficiently investment grade deposit and a story for the market. But we're moving along towards our pre-feasibility on that. We've got very strong community support, as you can see some of the people here. And you know, we're sort of targeting to get ourselves towards something where if we get into production and we do things, it'll be a 2021, maybe 22 sort of scenario. So this is where I say we're in that brownfields area. It's known commodity. There's lots of material in this area. It's been mined for years. What we are finding is we're probably going deeper, and they couldn't do that economically before. And as we go deeper, we're starting to find the grade is starting to pick up. So we're particularly interested in where we go, and over the next few weeks to months, we're probably going to come out with a bit more information to the market about what our plans are for the second half of this year. Care, this is our greenfields exploration areas. So as you'd expect, this is our more higher risk, if you like. But we have a portfolio of tenements here that covers quite a large area in Western Australia. Probably two of them are the most important ones to us. That's Hands Camp. Hands Camp, we've done some drilling. We've shown that there's traces for the nickel sulphide. We haven't found the nickel sulphide yet, because once you do that, the share price would probably go through 10p. But we're finding the traces, we're doing more drilling, etc. While we've been doing that, we've also found cobalt deposits as part of it, which of course the market always likes an interest in. So as part of our ongoing drilling, etc., there we are expanding that to assess that as well. One of the other major areas of the tenements that we have is at Mount Weld, which abuts the Lynas Mount Weld rare earths one, as I mentioned before. We're doing some drilling there at the moment. We're doing drilling right up on the border, just to make sure whether we've got rare earths there. It's a little questionable how strong it is, but we'll find out. And the other side of it is this is a well-known gold area, this whole area. So we're also doing some drilling around gold. What we've really got is we've got an area which is a fairly mineral-rich area. So what we're really doing is trying to move along, not throwing huge amounts of money in to assess it, but move it along in a fairly practical way so we can assess what we're doing and where we're going with it. All right? So this is the area where you probably find we could, you know, the surprise packet could really come out. Management team, again, you have to suffer another picture of me. But we've really built over the last 3 years or so a really balanced team, which is very important to this. Firstly, you know, okay, I've sort of run, and my background's more, I've been a manager of funds myself, about $7 or $8 billion, pounds, sorry, in the old days. I've also been involved with a lot of investment banking. So I'm much more that management, M&A drive, keep the things moving. To me, time's the enemy. We've got to keep ourselves moving forward. And that's also been why we're sometimes a bit acquisitive too. So the way to get our values up and our share price up isn't just doing everything ourselves. Sometimes it's finding people who've already done it and it being undervalued. So right at the moment though, we wouldn't be looking to do that simply because we have a project in Leigh Creek that it's very important we bring to delivery.
Do you mind if I just quickly ask you about, because you've mentioned the share price several times.
Yep.
It may be for some investors, it has been a bit disappointing,
yeah, sure.
but maybe they're not entirely convinced by this sort of diversification. Just say, obviously a big discovery would make a difference, but small investors want results. They don't hold shares for too long sometimes.
Well, that's true, and the truth is, you say that, but then the other side of it is small investors normally react when you put out a good news story. I can say we've probably put in the last 6 months probably about 8 to 10 good news stories out and virtually had no reaction from most of the market. In fact, we put out a bad news story the other day, which is fair because we report honestly and openly to our shareholders. And when we did that, there was virtually no reaction from the market as well. So I do have an anecdote. I don't know, I mentioned it before to Nigel. When I first came back and took over this company about 3 years ago, we did a negotiation with a party that had a rail company that we'd had a dispute with. And we ended up getting a settlement that was $650,000 US in cash. And that $650,000 was about a quarter of the market cap of the company. When we announced it, the share price went down. 2 months later, we announced that we were updating our website. The share price went up 25%. Okay? I actually do some part-time lecturing in investment management in one of the unis in Australia. And as I said to them, AIM is an interesting market because it's one of those markets where information, we're not reported on by 7 or 8 analysts, right? So information takes time sometimes to see. When we've had we had a big run up. We were about a year and a half ago, we were about 0.4 of a P, 0.5. We're now 1.5, we went up to 3.5, okay? When we had that, a lot of that related to the fact that we started to put on new customers at Cobra that were bringing in cash and therefore we're making a profit. Now, the beauty about that is we don't have to go out and raise money to keep the lights on like a lot of companies do, okay? So when we did that, it took, I would say, a good 3 months for the market to start to absorb that. Now, I'm very particular about getting out each quarter what our sales were for that. And so there's a little bit of a lag, but it does take time in an AIM market sometimes to digest information. And realistically, what can I do about it? Well, what I can do about it is I work at building the value in the company and wait for the market to catch up to it. Now, I can honestly say that myself and Peter Whale, who's over there, we back that ourselves. We have a lot of skin in this game. Peter's the second largest shareholder. When you take into account my options, I'm probably the third most exposed to the share price. We're not panicking. We're not worried about it. We know that in time it's going to be good. And in fact, we exercise our options. We know, and I'll mention something about that in a second, our view is that the share price is grossly undervalued at the moment. So, Nigel, I probably digressed and did a sales pitch as well, but I hope that's all right for what you were saying. So, myself, we've got Alan Broome, who's an extremely internationally respected mining person, particularly in coal. He's got behind his name AM, which is about the, doesn't mean a miner, it means that he is about the equivalent of an OBE for services to mining, okay? So Peter's experienced and provides both an interface to our investors and gives us and helps us with our social media aspects. We've just added Jeff Harrison to our board. Jeff is a very experienced mining engineer. So what we've now got is we've got a group, I might just mention too with Alan. Alan is one of the best mining strategists I've run across, okay? So he's helped us as we all have our input, but he's helped us formulate our strategies as to how. And for a company our size, where very few of us actually have as focused a strategy as what we've got. Between that, we have a great team that pushes ourselves forward. And as we said, we've gone from being something that, you know, 3 years ago was valued at, had a market cap of about £3 million to something that's over £20 million. Yeah? And if we went to those higher levels, it was probably over 30. But, you know, it's about building teams, getting them together. As Amanda said, I used to manage money like Amanda did. And one of our golden sayings was, good management are good for a company, bad management can kill a good company in 6 months. Okay? And that's the truth of it. You know? We have a very good team. I've got my CFO, I've got John Reynolds, who's helping to run most of my Australian stuff at the moment. Most of these people are contractors rather than full-time employees. We run very lean. We always joke we don't even have an office because basically I work at home, although my wife is killing me about it. And these are the way in which it's a new form of the way you run. But once you get your group together, once you get enough capital, you get enough movement, then you have the capacity to become almost anything. You know? And that's what we're pushing towards. So coming back to ticking all the boxes, we've got underpinning cash flows. As I said, last year we had cash in the bank at the end of it of 3.8 million US, and we made probably close to 60% on the profits from the sales in Cobre. We've got significant upside. Honestly, as we said, we don't have to go out to raise money, to dilute shareholders, to continue pushing the projects forward. So here we've got a basket of projects. All we need is one of them to come off, and you've probably got a 10p stock, right? So you've got really a lot of upside in this. It doesn't, and we're miners, so it doesn't mean it's always going to come off, but it means that you've got a number of bets in the thing. So we've got a bit more diversity in that regard. Strong management team, I talked about it. We're good at locating, executing and operating the things. And we keep a tight control on our overheads. I talked about our strategy. I do also mention there, it says there, resulting in significant battery market exposure. As I said, wasn't what our strategy was based on 2 or 3 years ago. We looked at what resources and metals and that we thought were going to do well with demand and supply, but as it's turned out, it's fitted very closely to that. Aligned with shareholders, all right? As I mentioned, the board and management have about 6.1. That's of what's exercised to date. There's still lots of options that have to go from that. They were options that vested. We set options when we were about 0.4 of a penny. We set options that had to vest at 1.5 and 3p, right? Most people told me I was an idiot for doing that because who's going to get to that? You know? All of those are vested. We've been there. Some of our shareholders have had the opportunity to either come in or out. Personally, I think we're still way down on what we should be. I haven't sold a share, and nor will I. Not just because I'm MD, but there's no way. I got some of my kids actually bought shares at about 1.8. So they're underwater a little bit at the moment, so I might be in a bit of trouble when I get back to Australia. But I've got no problem. To me, our shares are going to go up, and that reflected in recently an options program that we put in place for management. We've exercised the others. We're trying to give people where we're going. And I'll mention part of why we did this in a second. I'll backtrack slightly. And that is, we've set options now for management, etc. They have about 2 or 3 years before they get to them. For us to get anything from those options, the share price has to be at 5.75, I think it is, Peter. We all believe we're going to get them. Yeah? And part of the reason why we believe it is, if you look at this, SP Angel, who's our broker, and Nomad, now they're pretty respected for their resources research. Okay? Before we did Lee Creek, they came out and said that they felt that our natural range should be somewhere between 2.4 and 3.5p. After we did Lee Creek, they looked at it themselves and placed a price of about 3p for that project. Okay, so you're now talking about something that, done properly, which I believe we're doing, is going to result in like a 5 or 6p stock. Currently trading. It's almost finished, yeah. Currently trading at 1.5. Okay, all right. So we're aligned with the shareholders. In fact, this is the last point. You'll be glad, Nigel. So positive outlook. We've got lots of things going on in our different projects. We've got positive new flow coming in all the time. So in the end, it's a pretty unique sort of company. It's profitable. It's got lots of upside. You know, as I said, it ticks all the boxes. So, questions?
Thank you very much indeed. Okay, so questions for Strategic Minerals. Yep.
Oh God, I thought everyone was going to be shy.
Good evening. Just a quick question about Lee Creek.
Yeah.
And because it sounds like you've already got an offtake for the whole lot.
Effectively, yes.
Could you just expand upon that slightly, and were they connected to the mine previously?
Why they closed the mine previously?
No, so, were they connected to the mine previously?
Look, actually there's a long history that they had been at one stage. They run a chemical fertiliser business, and it's just down the road in Australian terms, about 400 kilometres. But it's quite interesting, and why I said before there's a reason why they want this contract. What these people do is, a result from Lee Creek is what they call a copper cement. right? And these people, that is exactly what they want for their own existing plant, because their plant's geared to that. Trouble is, what they have to do now, because they can't get it, is they buy copper, then they re-engineer it back into the cement form, right? So if you can imagine, as I said, they're paying us 85, which is a good percentage of the LME price. But to them, that's already 15% saving plus what they have to process on. So there's a win-win here, right? They're more interested in what I'm more interested in doing, is they're more interested in making sure it's not just about getting a product to them, it's about getting regular product to them. Most people, if you can't keep going regularly, they're going to say very soon they'll get jack of it and they'll look for something else.
So could they take more than you can produce?
Well, no. They've said they can take 300, right? Right at the moment, our production capacity is about 2,400. You know, that's the 200 a thing. But with probably about $1 million US, I can probably take that up to about 4,000, right? So there's scope there to do them, and there's scope to do that. The other thing is, we've got a certain amount of commodity in the area. I always joke, I want to become the robber baron. But once we start operating infrastructure in the area, obviously smaller, and then lots of smaller little copper deposits around are actually become viable. Alternatively, you become a processing plant and you can charge your money. You know? So we really see that. I mean, we see that as a huge potential upside. But we don't care even about that. Just doing this adds 3p to our stock. So we can't get over the fact that we announced this, and we got people in on the back of this, and yet the market is ignoring it. I do think there is concerns in the market, some valid concerns, let us say, that whether we'll be able to. This has closed before, and it closed because I think of poor grading management and some working capital questions, etc. We know all about that. We've gone over it. People think that. I got an email the other day going, "Oh, did you know this had closed before?" Well, yeah, we did do due diligence. We actually did go and look at this, you know. And we've had all my 4 directors. We had them out in March, and we all went to the mine to see it, to make sure what we're doing, to assess what, because we're committing a fair bit of funds. I will make this comment: all the funds we're committing this year to all those development projects are being funded internally. I have the money internally. The profits coming out of Cobra, not just even with this other client being a bit sus at the moment. I have the money to complete my program this year. Okay. Now, what I want to do after that, I've got to look at. It depends on what's happening with Cobra, what money I've got, what I might generate even in Lee Creek while I'm doing it. But right at the moment, we're not looking at capital raising at all.
Any more questions?
I've got off easy.
Okay. Any comments, Amanda? No?
Me.
Hey, okay.
Fine. Okay. Let us move on then to our. Thank you very much indeed to John Peters. Now to Amur Minerals Corporation, a rapidly growing resource exploration and development company focused on base metal projects located in, another, you might say, difficult area, the far east of Russia. They have 3 properties in the region. I'm sure we'll hear a lot more about them. Robin Young is a geological engineer with 37 years experience. He's worked extensively in the CIS since 1991 and often in remote areas and with junior mining companies. So let's hear from Robin and Amur Minerals.
Thank you, Nigel. We're more the exploration group. Our colleagues that have spoken before me are actually producing companies. I want to take you through a project that is going to be a world-class producer once we're in production. At this point in time, our legalese that our council likes to see us put up in front of everybody, we're the right project, the right location at the right time. And by the right project, we're polymetallic: nickel, copper, cobalt, platinum, and palladium. All of them recoverable into concentrate. We're located in Russia. There's a bit of upset going on now and then, but our relationships since 1991 have been strong and well developed. We're located 700 kilometers from the Chinese border, who incidentally is one of the 3 largest nickel consuming nations in the world, along with Korea and Japan. The right time, earlier my colleagues have mentioned the electronic vehicle market, the battery market. About a month ago, I was in Shanghai and was absolutely staggered at the rapidity in which the electronic vehicle battery market is moving forward. At this point in time, last year we produced about 2 million tons of nickel worldwide, and only about 1.5% of that was going into electronic vehicle batteries. It's projected to grow at a rate of 4% per year. 4% growth a year for the electronic batteries only means that in 7-8 years' time, we're going to have to be producing 3 million tons a year of nickel. Nickel only to go into the batteries, not to mention the cobalt, which is key to the battery, as well as the copper, because everybody overlooks the copper. We all have to plug in somewhere, and our entire electrical grid system is not suited for an entire EV market. So we've got the basis products, and we're in the right location at the right time. At this point in time, what we have defined is 1.5 million nickel ton equivalents on the project, and approximately 1.2 million tons of that is nickel. We've got 319,000 tons of copper as well. We are located, as I had mentioned, in the Russian Far East. We have access to rail. We are going to have to construct a road. Once that road is completed, we will deliver the concentrate and or a low-grade mat into the port of Vladivostok, providing access to the 3 largest markets in the world. At this point in time, about 80% of the nickel is being used in raw materials to NCA batteries, which are nickel-cadmium aluminum batteries. The ratio is presently ranges from 6 parts nickel, 1 part lithium, 1 part cobalt. And what is happening is because cobalt is running at $83,000 a ton versus about $16,000 per ton for nickel, the molecular structure is the same. There's something called an energy density. So there is a tremendous shift in moving the cobalt out of those battery anode or cathodes and moving nickel in place. So it's called it's a packing, and it's just because of the way the molecules are structured. Once we're in production, anticipated to be, I'm sorry, there's an error here. It says 2021, it should be 2023. Once we're in production, our production rate will make us among the 10 largest nickel sulfide producers in the world, nickel producers in the world. Mind you, we'll still be number 2 after Norilsk Nickel inside of Russia. We have a pretty experienced board when it comes to working inside of Russia. Mr. Schaefer worked with Kinross in the early days of exploration. Myself, I've been working in and out of Russia since 1991. Brian Savage has run an AIM-listed company with projects located in Kazakhstan. Paul Gazzard is our man here in London who's been working the city on funding projects and project management. Mr. Lunamovsky is what we call our Krisha. Krisha in Russian means roof. He has run Kinross operations inside of Russia for multiple years. He's one of our non-executive directors now and has excellent contacts and actually probably has some of the top numbers in the Kremlin and especially for ministers and his mobile phone. It's very important that you have this kind of protection and experience. We're well exposed on the local level with the local governmental agencies. Everybody's very supportive. Everybody at the regional level is supportive, and on the federal level they're supportive as well. They're so supportive that what the Russian government has done is put together a Far East development program under the direction of Vladimir Putin to specifically obtain foreign investment in the Russian Far East. This includes multiple upgrades to the potential of a project. 1, no net profits tax for 5 years. Then it's 50% of the normal rate, which is about 18.5% for 5 years. Royalties that you have to pay, which are a flat 8%, are 0% for 2 years. Then they increase in 2% intervals, 2, 4, 6, 8. Social taxes for the employees will be waived and paid by the government. Large-scale projects, infrastructure development such as power and roads, are to be funded by low-interest loans. The Russians are being very creative and very generative in trying to obtain foreign finance and investment inside of Russia. And as well, with China being the nearest neighbor and them having a very similar structured economy and understanding of how engineering and everything works, there's a real synergy between these two nations. And we've been working that front. We have our project in Russia, and we know our markets are going to be China and Japan and Korea. So it's very important that we work those relationships and begin to open up our development plan, which will ultimately be the development of our concentrate, onward sales, and later on the generation of a low-grade mat. The markets, this is our market review itself, and what I like to point out is here in the lower left-hand corner for you is the cost chart from CRU as of April of 2017. What you'll see is blue bars on the left side. Those are all nickel sulfide producers. They're the cheapest producers of nickel in the world as a majority. Then you see it slowly turning into a pink color and then moving into gray. And the pink color is hydrometallurgically recovered nickel. The second is the iron nickel, which basically comes from the saprolitic and limonitic parts of laterite deposits. And then there's the pig iron projects themselves. What's important is that at the $10,000 per ton line, 50% of the mining companies in Russia, or excuse me, in the world, are producing at a loss. Fortunately, the nickel price has risen quite a bit, but what you see is a red line. We're looking at a toll smelting agreement. Those are our costs. We fall right at the quartile lowest cost. If we build a low-grade mat facility, that mat facility will allow us to further reduce our costs. So this is a very important chart that shows where we're stacking up today in relation to the international production markets. And you can also see that the stockpile inventories are slowly decreasing. And the numbers that I received today was that last year only 33% of the world's nickel was generated through nickel sulfide deposits. Nickel lateritic deposits can be used in making of batteries, but the energy level or the energy required to get to a sulfate product is much, much higher than starting at a nickel sulfide basis. So nickel sulfide projects have the upper hand on this. Right now, about 50% of the sulfate nickel that is used to make these batteries, and it's only 1.5% of the 2 million tons, was coming evenly from the laterites and the nickel sulfides. So what we're seeing is that nickel sulfide discoveries are decreasing in number, but they're the better product to be used in batteries. This EV-driven demand it's a really remarkable thing to see. In Shanghai a couple weeks ago, as I'd mentioned earlier, the Chinese government is going to build Auto City. Auto City is the plan to put together all their car manufacturers in one location. And they want to be electronic, a complete electronic vehicle fleet by 2040. This is staggering when you take a look at right now today, more than 50% of electronic vehicles in the world are being bought in China. The premise is that within the next 5 to 10 years, you will be seeing not Honda, not Korean automobile companies, but you're going to see Chinese automobile companies here selling electronic vehicles on the streets. And the number one purchase criteria in those vehicles 15 years out is going to be the entertainment systems inside those vehicles, because you're going to be in an auto-drive vehicle and you're going to want to do something while you're sitting there and your car is taking you somewhere. So they're actually talking about how the phone systems, how the 3D geometrics, all these systems are going to be consolidated into one vehicle. Your purchase of an automobile is going to be based on an entertainment center, whether you can get Netflix. It's staggering. They're way ahead of us in a lot of ways. All our governments, you're taking a look, Sweden is very high already on the electronic vehicle markets. And what you see here on this right in here is a massive growth in the amount of nickel that's going to go into these batteries. The technology in the battery is now moving from a 6-to-1 to an 8-to-1, and they're talking a 9.5-1. So we're taking a look at this as being a large, large market. What's that mean to the world's nickel producers? We have to discover at least 700,000 tons of new nickel every year, and that doesn't happen. It's taken us 10 years, it's taken us 15 years to discover 1.2 million tons. And that is one project. That's one, and it's one of the largest projects in the world. So all these deposits, and I've talked about how the battery market, the laterites, the nickel sulfides aren't equal, and it's primarily because of energy costs. On a map basis, what we see is this is part of the Pacific Ocean here. We're in the Amur Oblast. This is the rail network. Our project is located in the upper fin of what I call our manta ray state. And what we're doing is part of our work is to build a road along that route. There are other mining companies in the area. Some of you know Petropavlovsk. Their operations are scattered nearby. What we're also seeing is that the commodity traders know this area. They've been working with companies like Trafigura and Glencore, have been in this area and purchasing metals already. Unfortunately, this is really a small fine print chart, but this is our resource that we have up here in the upper left-hand corner in the chart. And what you see is that we've got 155 million tons of resource, averaging approximately 1% nickel equivalent. When you take a look at the elements of cobalt, platinum, palladium, copper, and nickel using the May 8th pricing, you come up with an in-situ value of $21.9 billion. Of this, a significant part of that total tonnage will fall within open pit and underground mine plans. We've already reported the mine plans for 2 of the 3 deposits. We have the mining results will be coming in on a 3rd deposit very soon. We are seeing a very high ratio. The tonnage inside the mine plan right now is measured and indicated. There's minimal amount of inferred resource. So we're sitting at a very high quality. We've drilled out these reserves fairly well. The one chart I really like is where do we stand internationally? And you see here there's a red line that comes up this chart. These are greenfield and brownfield projects that could possibly go into production as the price of nickel increases. What we see is this red line represents 1.28 million tons of copper. That's what we have in our deposit. In fact, we sit right here where that little arrow is. Anything to the left of the line has less tons of copper, or less tons of nickel than we have. Anything to the right and above that line are larger deposits. And you can see that out of all these projects here, there are 10 of them, excluding us, that have more contained nickel. If you put a 0.4% nickel cutoff grade on the deposits, their average reported grades, 6 of them, their average grade is less than what we're using for a cutoff grade. Most of those deposits will not ever see production because there are laterites. There are other nickel sulfide projects that will increase from the other areas in here. But we're sitting right now on the 3rd largest nickel sulfide deposit in the world, and we haven't finished exploring the site yet. This is our operating cost projections charts. We have a toll smelting operation where we make a concentrate and we sell it onto somebody who toll smelts it. Toll smelting is a very punitive process financially to any company. You pay, John has a good rate, he's getting 85% for his copper. That's not the way it works in nickel. Nickel they'd say, oh no, it's not gonna work that way. We're only gonna pay you 70%. And then they pay you nothing for the cobalt, nothing for the platinum, nothing for the palladium, and you can negotiate some of the copper. But these are our projected costs. on the toll smelt. We've taken a look at building our own low-grade mat where we put in our own furnace and we melt our own product, which we can sell onward. What we're finding is that this low-grade mat process is much more financially rewarding to us. A, we get 99.9% of the nickel, 99.9% of the copper, and 99% of the platinum, palladium, and cobalt. Those are all saleable products that we can generate revenues from. So as you can see, our ultimate goal is to get up and running, become through toll smelt, generating revenues, and shift as quickly as possible over into our generation of a low-grade mat. On an annual basis, we've calculated our C1 costs, and they average about $2.77 a pound for toll smelt versus $2.61 a pound for a low-grade mat facility. And you can see that, you can actually see the Russian tax influence by the benefits they're giving us and the royalties they're giving us, because our costs start really low. And then right here in year 5, bang, they jump. That's where the new tax, half the tax kicks in, and the royalties increase a bit. As the life of the operation extends out, we do see an increase in the cost. But the average cost of $2.77 a pound is a lot lower. It's about $4 less than today's nickel price. So we're looking at a $4 operating profit per pound of nickel. 2,204 times 1.2 million is a lot of pounds of nickel. So where are we at now? We're presently reworking a pre-feasibility study. That pre-feasibility study is including the new information that we have just derived from RPM Global, who's done resource and reserve estimates for us. And we're looking to have a bankable feasibility study completed in 2019. We are considering various offtake agreements. These agreements have to be negotiated. They're a long-term agreement. You cannot lock your price in today. You cannot lock in your terms today, because we're not going to be in production for 4 to 5 years. I don't want to lock in at a price and the schedule, especially with the electronic vehicle market. We don't know what the ramifications are going to be. We do know this much. Nickel is going to boom. And I can't tell you what the future price will be, but some of the projections are that it'll be well over $10 a pound. I'm not saying that right now. What we have been using for the past years as a benchmark is $7.50 for long-term pricing. Today's price, again, is about $6.50 a pound. We're very close. The electronic vehicle market builders, the guys who make the batteries, are buying commodity now. They're buying sulfate, future sulfate. They're buying whatever they can get their hands on. They need to make sure that they have a supply to make sure that they can build the batteries for the cars that are going to be built. Financing. We've been pretty busy. We've been talking to multiple institutions internationally. We have a company called Medea Capital who has been assisting us in contacting various financial institutions. And again, this is another thing where you have to be careful in how you structure your agreements up front and early. It's too soon. We need to make sure we make the right step the correct way the first time. So that's on a technical basis and how we sell our product and how we build and operate the mine. And the second one is on how we're going to finance it. We do know that there is significant interest in debt financing the operation. We have talked to multiple international banks. They're all saying, how can we help? In other words, how can we lock you up to make a long-term loan commitment? That takes some time. We'll work through that. So we've got production to come online right when the real electronic vehicle boom is going to begin. The boom for this electronic vehicle market is set for about 3 to 4 years out. It's the perfect timing for us. Right place, right time, right location, right commodities. So our investment case or our key point items are we've got one of the largest nickel sulfide deposits in the world. It's the largest one in Central Asia, where the 3 largest commodities are located. We have at least 12 years of mining life. I would look for that to change in the near term when we announce the new mining results that are going to come out of our open pit analysis that's being completed. We will take a second look at those open pits because they'll probably be smaller because we can make more money mining it underground. So it will be an open pit to an underground interface. Where are we located? We are located in the Far East of Russia, but we've got the 3 hungriest international markets. The commodity, nickel, electronic vehicles. China is going crazy on what they have to do to sustain their economies to make sure that they lock up the high energy density commodities of cobalt in particular and nickel. The price, we don't know what it's going to be. But we do know that we have seen a good solid run-up. About January of last year, we were looking at $3.90 to $4.10. We're at $6.50 now. And the stockpiles are continuing to decline. The projection, the last projection that I had from Macquarie Bank was that the stockpiles are going to become what they call dangerously low in about a year and a half. And that's because the battery markets are going to begin to consume the nickel at a faster and faster rate. There's no substitution for nickel at this point in time. Everybody talks about the new air batteries, the new batteries that just don't need any metal, don't need anything in them. That technology is producing some positive results. The problem is, nowhere is it commercially viable nor scalable to meet the demands of the market, which really is the current existing technology of nickel, lithium, and cobalt. Strong management, we've pointed that out. We have full government support. They're saying, how soon can you get this into production? We can help on the loans, low interest loans, generally 1%. Pretty good loans, no payments back for 5 to 7 years. We've got a lot of engineering work to do to qualify for those loans. But it's one step at a time to make sure we do this right the first time. On a timing basis, we're looking at development of the BFS, working through a PFS study, and we're also looking at how we can develop this mine into a sustained long-term operation that's going to go a couple decades. Instead of right now we're working with a 15-year mine life. That's when our mining license expires. The Russian law says if you have more resource on your license and you can mine longer periods of time, you have the right to extend that operation. So as everybody's, there's a lot of negativity about Russia, but if you work with them and you work with them well, it's not a bad place to work. And the jurisdiction and the codes are pretty clear. You will do the following items, and that's what you work to. It's no different than having the opportunity to work in Turkey. All right, so what we're saying, just to summarize, right place, right time, right commodities. We couldn't ask for a better position.
Thank you very much indeed. Robin Young there from Amur Minerals. Now we're almost at the end of our time. We have got time probably for a couple of quick questions. We've got one at the back. Yes, over here.
Just a quick question. You had a share price spike in June 2015. What was behind that?
June 2015, what was it? That was the award of the mining license.
Okay, and why did it spike so much?
Hot interest in the share price. I mean, the classic answer, and it's somewhat facetious, is far more buyers than sellers.
No, I know that, but did you not have forward notice of that, or did it surprise you?
No. It's we were reporting as we progressed through the license. The license came in, bang, share price jumped. Okay.
Thanks.
And then it settled back down to probably what was a more reasonable level at that point in time.
Yes, please.
Yeah. I just want to make one comment that, of course, we have that sort of exposure to the EV and that. One of the things that brought it home to me was I was talking to somebody and they said, oh, yeah, I just filled up my car with electronic vehicles. It cost me £1. And I'm thinking, cost him £1, Probably one of the most interesting things I think for us, even as a wider look, is how governments are going to go when they start losing their royalties off the petrol. And how are they going to move that in such a way that they can affect the things? But if you think about that and you think about the improvement in batteries, and it just backs up his story exactly, they're talking about, look, instead of driving to a petrol station, you'll drive in, they'll switch the batteries and you'll drive over, swap and go, you know? Once you can make it long enough distances and stuff like that, this thing will just flood through.
The typical pricing is for every kilowatt hour in a battery, if they can get that price down to $95 on the manufacturing price, look out. Because then everybody's going to start buying. Because the ranges are going to have increased on the vehicles far enough that you can make these longer trips. And you're talking about swap outs. The swap outs, they've got down to 10 minutes. And when the ICE engine, the internal combustion engine, hit the roads, everybody said, this thing will never work. This is in the US, and they were all steam engine cars at that point in time. They said, this will never work because there's no gas stations. Within 2 years, there are more gas stations than anybody knows what to do with. And I see the same thing in the neighborhood where I live. There's a health club that I drive by, and I drive by it now. There's a health club I drive by every day and to get my Starbucks coffee. And every 3 weeks, there's a new electric pump sitting there. And I know that the people, and I live in a nice area, I know that the people drive up every day and they plug in there and don't go to the club, they go to Starbucks, have their coffee, and then they come out and go home, saving themselves £1 to top up their battery. So it's amazing. And China is so visionary on this. And it was, I've got 5 or 6 trips under my belt now. Every time I go in there, the playing field changes.
Let's also face it with China. It's a double win-win because they've got such a large smog problem. So this will have a huge impact on that as well.
Yeah, I was going to say we're just running out of time now.
Sorry.
It just seems a very good note to end on, seeing how these natural resources are key to where our world is going, if you like, and all these different companies we've heard from this evening are doing different things. We've got a question, have we, from our audience?
Yes. I'd like to ask Robin, what's your current market cap, first of all?
I'll let my CFO is sitting in the back room. If you get your phone on, how are we doing today?
So you're mid-35s. You have just painted an astonishing vision of the future. Now, how long will it take you to actually get to that future? And more to the point, what's your exit strategy? What would an exit look like for you? And over how many years might that take before it happens?
Well, actually, I believe it was John that made the statement that with AIM, when you make your announcement, the share prices stay flat. We've had a couple pretty big spikes. One was the award of the mining license, and the other one was another award of production rights. So those two we caught big spikes on. So we've been holding right now, we're holding right around 5p. Our exit strategy, okay?
And over how many years? Because it could be quite a long way into the future.
Our policy is basically that we are staying the course. We fully intend to make every step towards a production basis. We have to assume that we're going to have to build this thing. So every day, all our decisions are on that basis. We know there are parallel tracks and parallel options that are running alongside of us. And we are in contact with companies that could possibly do it. I talked about a furnace, okay? I can do all right mining, running it through a plant and making a concentrate. But when it comes to smelting ore, that's pretty much way out of my league. And that's when we would take a look at somebody like a major Korean or a major Japanese or Chinese smelting company coming in and forming a JV at that site and doing an agreement with them.
So it's more JV orientated rather than share stakes or debt from other people?
The board is open, or The area that we could go to is wide open. We do not want to, what we would call, tension the deal. And by tensioning it means if we do a very specific deal on, say, the smelter, and then somebody else wants to come in and participate in the mine, well, maybe the smelter terms would eliminate some of those people who would be interested in possibly being a mining partner with us, whether it would be, say a Rio Tinto or a Valet or somebody like that. No. So we're trying to make sure that we don't put this tension in the deal so that we preclude anybody who would come out of it. Exit? Depends.
Is there a big price involved at the end of the day?
I'm sorry?
Is it a big price at the end of the day? Are you looking at for a very large number?
I would hope so.
He's not going to say no, is he?
I would hope so. You know, look, I showed you an in situ value for $29 billion. I don't think we'll see that. Okay?
Somewhere in between 35 and 29 billion.
Okay. Should we just get a couple of sentences in reply from the other two companies on exit strategy? I mean, it's a pretty good point. It's something all investors need to ask, and indeed asset managers.
Well, I guess one of the things I can say is, as I said, we're pretty invested ourselves. Obviously, with us, it'd probably be more of a takeover per se. And if that was happening, well, it's got to be the shareholders themselves that decide that. You know, we'd be part of that voice. We'd have a comment. But, you know, it's a hard question to answer. And sorry, when you ask that question, well, of course, if someone comes on and offers you too much money, you're going to take it, right? But, you know, what's too much money? Yeah?
And it's very, very important, that shareholder statement.
Yeah.
You know, you got to have the shareholders behind you on that offer.
Yeah. It's part. You've got to keep an ongoing dialogue with your shareholders.
Realistically, when it comes to exit strategies, there really isn't necessarily an exit strategy. Mining companies go through different stages of evolution, and at every stage they have different investors and different management often. So the management that explores and develops a project won't be the guys often that build it, and won't be the guys that run it in the long run. Yes, the exit strategy could be a takeover at a high price, but those things are actually rarer than they are common. And they can happen, and at the height of the market, there's always some really overpriced M&A, and shareholders will benefit from that at the right price. But on the whole, shareholders leave when they've made a return on their investment, and they are looking for a different type of return. A production company is only going to go up at a certain level. An exploration company is innately riskier, but theoretically has higher rates of return. So there are different, the exits are when you decide to come in and when you decide to exit the share price, largely speaking.
Okay, well, on that note, let's end it here, because some of us would like a drink, and we've heard a great deal from all our guests. We're very grateful to them, to Amanda van Dyke here from South River Asset Management, from Dr. Kerim Sener from Ariana Resources, John Peters from Strategic Minerals, and Robin Young from Amur Minerals. Let's thank all of them. Let me just quickly mention our next event. Scott did mention it at the beginning. We've got two more in this season. The next one is on oil and gas. It's on the 17th of July, so I hope that you'll come and take part in that, preferably here in the room, but you can watch from home, because we will be trying to webcast all these presentations, and we'll be joined there by Malky Graham-Wood, who's very well known to many of you, an independent and thought-provoking analysts in oil and gas. And a quick mention too, we were just hearing how helpful it is to hear at length from company chiefs about what they're up to. There's loads and loads of interviews on the London South East website. This is stuff that you won't find anywhere else. So if you're interested in a company, do spend a little bit of time, go on the YouTube channel for London South East. There's loads of good stuff there, which you might find very helpful. But on behalf of LSE, thank you very much indeed for coming. Enjoy the refreshments.